Hi guys, this is Sia Jane and welcome back to my channel ACCA and Beyond. So in this video we are going to be continuing chapter number 3, which was about intangible assets. So I believe we stopped over here. So let's continue with research and development. So when you build a certain product, you just don't start with the development, right? You need to research maybe how to produce a product, or maybe research the market, how much are people willing to pay, how much can you sell it for. So yeah, so this is all of the process or the steps you take before the actual development, before the actual production of a product, is known as research. So research is original and planned investigation undertaken with the prospect of gaining new scientific knowledge and understanding. So when you gain something new, scientific knowledge, or maybe that is maybe for the building of the product, or maybe something new understanding that is around the market of the product, we call it as research. And development is the application of research findings or other knowledge to a plan or design for the production of new or substantially improved materials, devices, products, process, systems, or services before the start of a commercial production. Even I can't remember what I just read, so I'm just going to explain it in simple words. When you start building a product, we call it as development. Now development can also be if you're just improving a product. Maybe you already have a perfectly working product, but maybe you want to update some feature for it, so that can also be categorized as development. Now what is the accounting treatment for this? Research expenditure is very simple. Anytime you have a research expenditure, I don't care, we don't care what it was, whether it was for something scientific or something for the market understanding. We don't care, we don't give for what it was. We are just going to expense it to our profit and loss. And for development expenditure, we recognize it as an intangible asset only and only if and it can demonstrate all of the following. If it is probable that so this is your acronym, that is pirate. But it's very easy, you don't need to learn this acronym, you can, it's very easy to understand the criteria. So it should probable that that economic benefit from the asset, whether through sale or internal cost savings. So we are probable that something economic, something will earn some money, some consideration from the asset, whether it can be directly selling the asset, or maybe you're reducing the cost, like maybe you have a perfectly working product, but you want to update something, you want to change something in that product, which helps the company in cost savings. Like right now the manufacturing process is taking 50 per piece, but if you change something in that product, it's going to cost you 45 or 46 rupees per piece. So that is internal cost savings, like 46 per piece making, right, my making charge. So that is internal cost savings, and it is saving money for my company. So it can be recognized as a criteria. Its intention to complete the intangible asset and use or sell it. So we have the sorry yeah, so we intend to use or sell the intangible asset. We can reliably measure the development cost. There are adequate resources to complete the project, like we have all the resources needed to complete the development of that product. And there's technical feasibility of completing the intangible asset, so that it will be available for use or sale. So it is technically possible, right? We are not building something out of this world, no one has heard of it. We also don't know how we are going to complete it. That's not right. Okay, we cannot it should be possible to complete that project, and it is expected to be profitable. Again, that, like, that economic benefit is going to flow, and the cost of the project will be exceeded by the benefits generated. Cost of the project will be exceeded by the benefits generated. I don't know, this is something I think is wrong, but yeah, that there are going to be profit in the project. So if these all criterias need to be met for it to be development expenditure, otherwise it is just research expenditure. It is only expenditure incurred after the recognition criteria have been met that should be recognized as an asset. Only after all of these recognition criteria have been met, we can call it as a development expenditure. Otherwise, a development expenditure. Yeah. So maybe before all of these criteria were met, we recognized 100 rupees in PNL But now we learned that no, we are certainly meeting all of our criteria. So now we want to turn this 100 rupees and capitalize it into our financial statements. But that is not possible. We have already expensed this in a P&L, so we cannot convert it into a capital or as an asset in our financial statements. If an item of plant is used in the development process, the depreciation on the plant is added to the development cost and intangible assets during the period that the project meets the development criteria. That is because the economic benefit gained from the plant in this period is only realized when the development project is complete and production is underway. It will be taken to the statement of profit or loss as amortization and within the amortization of the development cost. Sorry if I have not read that properly. So basically, it's saying that if you are using a product or machinery for bettering a product, to reduce internal savings or to sell it at a profitable amount, if you're building a product using one of the company's machinery, so the depreciation which we are going to be charging can be included in the intangible assets criteria. So let's just solve this test your understanding, which will help us gain better insight, better understanding. So, first time test your understanding. An entity has incurred the following expenditure during the current year: 1,000 spent on the initial design of a new product. It is anticipated that this design will be taken forward over the next 2-year period to be developed and tested with a view to production in 3 years' time. So, we can see this is very still early stages. We have not yet started working on the development and not even tested it, not even developed it. So I can see this 1 lakh is just my research cost, and it's very simple. When it's a research cost, it's very simple. We don't have to think about anything else. It's just going to your profit and loss as a loss, as your expense. Now the second one, 5 lakh spent on the testing of a new production system which has been designed internally and which will be in operation during the following accounting year. This new system should reduce the cost of production by 20%. So I can see that this would reduce my cost of production, which is my internal savings. So I guess this meets the recognition criteria of the development uh, expenditure, because it is also in the testing stage, which is like in the development stages of a product. So this 5 lakh rupees, I am going to capitalize it as an intangible asset. Now for test your understanding too, and this is going to be the last thing which we are going to do for today. It's going to be a rather small video. So an entity has incurred the following expenditure during the current year, and we have to explain the accounting treatment again. So a brand name relating to a specific range of chocolate bars purchased for 2 lakh rupees. Um, by the year end, a brand specialist has valued this at 2,50,000. 1 second, just 1 second. So we can reliably measure the brand at 2 lakh rupees and recognize it in our financial statements. And but over here we also said a brand specialist had this valued at 2,50,000. But again, as we discussed above, it is very highly unlikely that these products have a brand name, because this is an homogeneous product. So this they do not have an active market for me to find out the fair value of this product. So this 2,50,000 might not be accurate. So I'm just going to recognize this as my asset, as my intangible asset at 2 lakh dollars, and I'm going to amortize it over its useful life. Now the second one, 5 lakh spent on developing on a new line of confectionery, including 1,50,000 spent on researching the product. Therefore, management gave approval to fully fund the project. So this 1,50,000, it's very simply given that this was a research expenditure. So research expenditure, I'm going to simply write it to my P&L. And from my 5 lakh, if we remove 1,50,000, it gives me 3,50,000. So this can be recognized as my development expenditure, because it was spent on developing on a new line of confectionery. That means I can capitalize it as an intangible asset. Now, the third and the last one, training cost for staff to use a new manufacturing process. The total training cost amounted to $1 lakh, and staff are expected to remain for an average of 5 years. This is a very simple one, and you're going to see many sums like this, like where they are asking if they have spent money on training new staff or employees. So, can we capitalize that cost? It's a very simple no, because there is no guarantee that you know that the staff is going to remain with us for this many years. There are many number of circumstances that can happen. They can quit, they can leave, we can fire them, they can die. There are so many things that can happen, so we cannot reliably measure it. So no matter how much they are trying to convince you also in the exams that let's capitalize this cost, training cost is can never be capitalized. It will always be your expense in your PNL. So with this, I think we have completed this chapter. If you found this video useful, please let me know. If you need any help, please feel to reach me out in the comment section. And please share with your friends, like, share, and subscribe. It can help me a lot. And thank you so much for watching.